Hello, ladies and gentlemen. Welcome back to another episode of Investing for the Common Man. Today's video is going to be a bit different style than some of my others. Now, if you've watched my other videos, you know that I believe that there's never been a better time to start investing than today. Now, that's because of better trading software, brokerage firms trying to democratize the trading industry, and the elimination of almost all commissions and fees. But if you've been watching the news, or maybe you've checked some market data, you know that the past 2 weeks have been rough in the stock market. Some might even characterize it as a bloodbath. So you might be asking me, Luke, why would I want to start investing in this scary market? I'm going to try and answer those questions and give you a few of my own thoughts in today's video. Let's dive right in. Pulled up, you can see that I have a chart of the S&P 500 index. This chart is of the past year, and every single one of these little candlesticks represents 1 day of trading. Over the past year, you can see that there's been a very strong upward trend. We can just draw some lines here to sort of, these aren't perfect, but to sort of get an idea of the overall health of the market has been good, and overall prices of stocks have been increasing, which results to gains if you're buying stock. But right here, we have this massive downturn. And this is what we call a stock market correction. Now, we have three terms for when the stock market goes down. There's a correction, a recession, and a depression. A correction is defined as a downward move of 10 to 20%. Right now, we're sitting at between 12 and 14% downward move. A recession is a much more prolonged downturn in the market, closer to 6 months. And then a depression is even longer than that, usually multiple years of economic downturn. So the question is, how do we know? And the answer is, we don't know if something is a correction, recession, or depression until we get out of it. But we can look around at history and at the current conditions and the conditions before this downturn to sort of get an idea of what might be going on. Now, if you've been watching the news at all, you know that right now COVID-19 is big news. The outbreak that started in China and then has moved all over the world, and there's cases in the US. Now, that news first broke right around here, okay? The stock market reacted a little bit, and then there was sort of some volatility, some up and down, and then we were up to record highs again. Right here is where we started seeing cases widespread outside of China, in Italy and Iran, and then things started to get dicey. And really here was where there was a realization that it was sort of going to spread widely across the entire world, and it was going to be a big deal that every nation was going to have to deal with, not just China. So the week before this past week was just a bloodbath. You had these major downward moves. Let's just zoom in. Major downward moves, okay? And then this week there's been some volatility with this past Monday, March 2nd, being the biggest move upward in the stock market in a single day in history. Now, I just want to give you a little bit of perspective with other market downturns and what they've looked like in history. So let's back up. Let's zoom out to a 20-year chart, okay? So this is the stock market over the past 20 years, the S&P 500 index. And so we've had a few of these bigger downward moves, these corrections, as we would call them. The biggest one is actually right here, which was a little over a year ago, December 2018. Now, this correction was triggered by multiple things. This correction was triggered by a trade war with China, slowdown in global and economic growth, and the Federal Reserve, some people thought they were raising interest rates too quickly. But then the market quickly recovered and got back. So I started investing somewhere around here. So I made a little bit of money, and then I had this big sell-off, which was really scary for me because I'd never experienced anything like it. But I held on to everything. I didn't sell anything and rebuy or do any fancy trading because I wasn't ready for that. And I just held on, and then a few months later, we were right back up where I started, and I was back in the green with some gains. And then we kept on going to record highs, okay? Now let's look back even further. Where was there a bigger move? Because what if this gets worse? What if this COVID-19 issue becomes a global pandemic and just shuts down business all over the world and affects global economic growth? Well, if we go back, the other big move that we have on this chart is the economic crisis of 2008. Now, this is actually a couple of years because it took a few years to happen. If you remember reading The Big Short, or I think they made it into a movie, or you learned about this in school, this is the housing bubble right here. Our entire economic system was on the verge of collapse, and there were systemic issues. And so this is a recession right here. This is not a depression, but a recession. And from the peak here to the low here is about 50 to 60% loss. Now you might be thinking, there's a depression that I remember hearing about growing up in school. Yes, that would be the Great Depression. But that's not on this chart. Let's zoom out, way out, see if we can find the Great Depression. Now this chart goes all the way back to 1928. And the Great Depression was actually right around that area. So let's zoom in to right about here. So this right here was the Great Depression, okay? So we went from the S&P 500 went from about $31, $32 all the way down to $4. This is about a 90% drop. This is catastrophic, and this has spanned multiple years from about 1928 to 1931, 1932 before things started picking up. But if we go back to this chart, we can barely see this blip right here, okay? And the U.S. economy is and has always been resilient and tends to come back. You have these two big downturns. This is the one in 2008 we just talked about, but it always seems to recover. And whenever we have a correction, it's actually thought of as a healthy thing, so that we can have this correction and then keep moving upwards. So if this is a stock market correction, then corrections are actually the best time to buy, because you get discounts on great companies that are doing well during these times of growth, these times of upward movement. Let me switch this chart back over to a 3-year chart. Actually, no, let's go to a 1-year chart. So over this period of time, you have companies like Apple, Amazon, Microsoft, all growing, really historic economic growth, okay? And we're at all-time highs. We've never, the stock market has never been this high. So some people thought we were too high, and so the COVID-19 event, which will pass, it's something that is serious, and I don't want to downplay the significance of it. And the human toll is tragic. I'm not downplaying that, but it is something that will pass. Medicine will advance, vaccines will be developed, and eventually we'll get a handle on this. And going into this correction, most of the economic indicators like consumer confidence and U.S. economic growth were very strong, and that's why we were at these all-time highs right here. So if you're looking at becoming an investor, starting investing, really the best strategy to start with is buy and hold. And the idea is to buy things low and sell them when they're higher. Well, when things are looking great and you've had a long trend of upward motion, you can buy into it and hoping to follow the trend. So you could have bought here and then had a dip in the short term, and then, made some good profits. But if you buy at the top and then you experience a correction, you can experience a large loss, which is okay if you're willing to hold until the correction corrects itself and rebounds. But if you buy on the way down, if you're investing now, this could be one of the best times to buy. I'm not saying that this is the bottom. We might go further down. But the stock market's not going to go to zero. This is not a world-ending event. So at some point, economic growth will resume. And this might be weeks, months, or even a year from now, but we'll probably see some uptrend. And so you can buy now, you can wait until you maybe hear some more positive news about the virus thing. But if you wait until there's sort of an all clear signal, or, a vaccine has been produced and distributed and everything, the economy is going to rebound and be back up here. And you're going to wish that you had bought during the correction. So all this to say, don't let all of this scary stuff scare you. Don't let it intimidate you. Really, with a buy and hold strategy, it doesn't really matter where you enter. And entering during a correction, even if it goes down a little bit further, can be a good thing, because you're gonna get a much better price than if you wait till everything is, puppies and rainbows and all cheerful in the world. At that point, we're going to be back up to record highs. So I just want to encourage you, if you're new to this and you've heard the headlines, don't let it scare you. Look for deals. You can find great companies that are at a discount right now because of this pullback. Companies like Apple, Microsoft. Take your choice of whatever companies you're interested in. If you're interested in fast food that's going to be hit, I've heard that Wendy's is a really, really strong company. If you think about, let's just look at one for an example. We've heard a lot on the news about cruises. Okay, so this is Carnival Cruise Lines. And so you can see here, they normally trade in the $40 to $50 range, even up at a high of 57. Right now, we're all the way down to $26 a share, or $27 a share. This is almost a 50% discount. And Carnival Cruise is also a dividend-paying stock. So this could be a good time to pick it up. Now, people aren't going to want to go on cruises anytime in the next couple of months. But if your time horizon is years or decades, this could be the best opportunity you get to buy this stock. Or sometime between now and the next, in the next weeks or months, could be one of the best opportunities you get to buy a stock like this before it goes back and resumes, its normal trading range between, say, 40 and 55 or so. I mentioned Apple, so let's just take one quick look at that. This will be the last one. So Apple has been just doing phenomenally over the past year. It's really the most valuable company in the U.S. stock market, valued at well over $1 trillion. But here we have, it traded sideways when the COVID-19 news first broke, and then it experienced this downturn, reaching a low of 250 with a high of 327. This might have been one of the best times to buy. It might go down further, but already I wish, right now we're back up here at $289. I wish that I had bought here, but there's no way of knowing on the way down what's going to be the bottom. So buying during a correction can be a solid strategy, because eventually things are going to turn around. So yeah, that's it. That's all we're going to talk about for today. I just wanted to encourage you and maybe clear up a little bit of the fear. There's an old adage that you should be fearful when others are greedy, and you should be greedy when others are fearful. Right now, there's a lot of fear in the markets, and it could be a great time to be greedy and sort of buy up some things in a forward-thinking move, thinking of when things are going to rebound. Yes, things may be rough now, but that could be one of the best times to buy, because you get the best discounts on the stocks that you want to own. All right, that's it for today, but I'll see you in the next video, and until then, happy trading, everyone.